Mike, we could not hang on to the gains, at least across the board, that we just peaked into right before.
I mean, still certainly a modest victory from the late morning when we were hitting the lows. We really are wobbling around in this pretty tight range for last couple of weeks. If I ask if the character of the market has fundamentally changed, right? We've seen this seasonally weak period. We see the earnings estimate forecast trends kind of rolling over a little bit. We see people bracing up for some kind of a meaty pullback. The behavior of the market's not telling you that anything has necessarily become different in terms of, yeah, we're buying the dips. Yeah, we're kind of having this rotational type action under the surface. And the one thing I would look at is the cyclical groups. We have had resilience to some degree in the consumer, and they've not given way. They've not kind of given up that hope that, in fact, we're still in recovery mode. So it's a tough little tactical moment to figure out, but I don't think the market has necessarily changed its complexion just yet.
4473, the level on the S&P 500, and we've moved sideways over the last couple of months, really. What's your year-end target, Eric?
So, Wilford, we're at 4,800 for this year and 5060 for the end of 2022. That's really based off of $200 of S&P earnings for this year and $220 for next year. We think investors will pay 24 times this year. We don't think that's an egregious number, and 23 next year. So a little bit of margin compression is likely, a little bit of Fed tightening, but we still think this is a great environment to own stocks.
Well, that seems pretty bullish to me after the sideways action that Wilford was talking about and where we have been. Stephanie, what do you think about 4,800 for an S&P target year end? Can we get there?
I'd like to see it get there. I don't know if we get there, but I do think we're going to see a fourth quarter that is pretty good. You know, I think September we have to step back and just say it's a volatile month, and this year is no different, right? Typically September is just very volatile, and we're only halfway through. And it's always something. And I think the something now that's going on is a couple things. China and the regulation headlines and the tensions with the U.S. It's also the supply chain issues. Some are saying it's worsening. Some are saying it's just not getting any better, and that's slowing growth. And then Delta, well, the numbers look pretty much better, right? But you have back to school to consider. So, but on the other hand, in the face of all this, you have some pretty good economic data. The Empire State, for example, the Philly Fed, much better on a month-over-month basis, and the industrial production numbers are only 2 percentage points off of the pre-COVID high. We talked about retail sales a little while ago. They were great. And the jobs market, a 4-week moving average down 61% year over year. We're making progress. Still need a lot. We still have a long way to go. But the one thing, Courtney, is I look and listen to companies and what they have to say. And last week, Vertical Research had a conference, an industrial conference, and several companies said it's not a demand problem. Demand is actually quite strong. It's the supply headaches. It's 3M, Eaton, Parker Hannifin, Dover, even Lam Research. They're all saying demand is quite strong. So we have to get through the supply chain issues. That should help growth going forward. So and in the meantime, they're going to have pricing power, and they're going to cut costs just to make sure that they can retain earnings. So I think fourth quarter setup is good, and you want to own these cyclicals because they're down so much along with the reopening names too.